Investing in the stock market is a great way to grow your wealth, but it's not without its challenges. One of the biggest obstacles for investors is their own psychology. In this video, we'll explore some of the most common emotional biases that can impact investment decision-making, and provide tips on how to overcome them. The first bias we'll explore is panic selling. When the market takes a dip, many investors panic and sell their stocks in a rush to minimize their losses. However, this knee-jerk reaction can actually lead to bigger losses in the long run. Instead of selling when the market takes a dip, it's often better to hold onto your stocks and wait for the market to recover. Another common bias is overconfidence. This happens when investors become overly confident in their abilities to pick winning stocks. While confidence is important, it's essential to remain grounded and do your due diligence before making investment decisions. Avoid making impulsive decisions based on hunches or gut feelings. The third bias we'll explore is confirmation bias. This is when investors seek out information that confirms their existing beliefs and ignore information that contradicts them. To avoid this bias, it's important to seek out a range of perspectives when making investment decisions. Don't just rely on one source of information, and be open to changing your views if new information emerges. Fear of missing out, or FOMO, is another common bias. This happens when investors jump into a hot stock without doing the due diligence, simply because they don't want to miss out on potential gains. To avoid FOMO, take the time to research a stock before investing. Look at its financials, its market position, and its growth prospects. Don't make investment decisions based on hype or fear of missing out. Finally, we'll explore the bias of loss aversion. This happens when investors become overly focused on avoiding losses, rather than seeking out gains. While it's important to manage risk, it's also important to take calculated risks in order to achieve gains. Don't let fear of losses prevent you from making smart investment decisions. By being aware of these emotional biases, you can make smarter investment decisions and achieve better long-term results. Thanks for watching, and happy investing!